Alright, what's going on, y'all? Welcome to the channel. If you guys have never checked out any of my videos, I appreciate you guys checking this one out. For those of you who are subscribers of mine, I appreciate you guys checking this out as well. Want to go over a couple different setups that actually happened today. I caught one of them and I didn't catch the other one, but I drew it out perfectly. But I was in this trade, so I didn't take the other one, if that makes sense. But I want to go over both of them because they're completely different setups on different time frames. Again, trading supply and demand strategy. Those of you guys that know me, I'm mostly a supply and demand trader, although I'm starting to dabble in some other things as well. But supply and demand is kind of my bread and butter. So we have this demand setup. This is USD CAD on a 5-minute time frame. So we have really price was bearish all of London, making lows, just making bearish structure, and then finally it starts coming around and creates this high right here. And if the trend would have continued, it would have gone to make a lower low. This would have been a lower high. It would have gone to make a lower low, but it didn't. It actually made a higher low, and then it came up, broke this structure, and made a higher high. So it starts breaking out of bear structure, making bullish structure. This is the 200 moving average, this blue line, and this is one reason that the one thing I did not like about this setup would be the 200 moving average kind of being in the middle of it. Usually you want it to be like right below your demand setup or right above your supply setup, and then your trade goes away from it. Technically, the trade still was going away from 200, but the demand setup was a little bit beneath it. For those of you that don't know supply and demand, this would be a valid demand right here. There's also one right below it where there's a bearish candle right here and then a bullish engulfing at least this type of demand setup. There's also 2 candle demand setups, but just for your reference, this is a demand zone right here. Some people that trade different styles, ICT or something like that, order blocks, similar concepts. But demand setup happens, we break structure, we come back, we perfectly tap with this first wick, and I didn't enter on this one because it literally tapped it and then just flew back up, so I wasn't going to get in quite that aggressive. Next bearish candle was bearish, closed, and then this one came down, tapped in a little bit further, and then immediately started rejecting. When it immediately started rejecting, that's the second candle that's immediately rejecting, I hop in. So I hop in right here, 5 pips stop loss. I'm willing to risk 5 pips. And I end up taking this one to TP with, this was 11 pips. So this was like a 1-to-2 risk to reward ratio, 1R risk, 2R reward. And I'm working on not getting just those 1-to-1 risk to reward setups, right? Because 1-to-1, you can be profitable with 1-to-1. I know a lot of traders that are profitable with a 1-to-1 risk to reward, and they still are profitable, but it just makes it more difficult. You have to be so on point with your strategy, and you have to have a really high win rate. A 1-to-2 or anything higher, if you're getting more rewards than risk, 1-to-2, 1-to-3s plus, there's just a little bit more room for wiggle room, and also if you're trying to get funded or if you're trading funding, it's a little bit easier in my opinion. So I took this one, I took out partials at 1-to-2, and then I actually rode this up, and I believe I took out my second position at a 1-to-3, somewhere around 15-16 pips. So yeah, this was just a pretty simple trade, guys. Again, you guys do not have to. I think a lot of people make trading like super more complicated than it needs to be. This is such a simple strategy, and to be honest, I think anyone can learn this strategy. It's a very simple strategy, again, but you have to be aware of market structure. You have to know the basics of market structure, but after that, it's just learning how to draw your supply and demand zones, and then also reading candlesticks. Because if I didn't know how to read candlesticks and didn't realize, that these rejections from the zone meant that it was going to continue bullish, I was completely confident that this trade was going to continue bullish just by reading the candlesticks. So that's something to work on as well if you don't have it already. But Another trade that I want to go over, and like I said, it's on a different time frame. So we can go over to GBP USD. This is on the 5-minute, but I found this on the, not the day, whoops, I don't trade that high a time frame, on the 1 hour time frame. So GU has been bearish for a long time now, on higher time frames. And just overall, it's been bearish. So it's trading below the 200 moving average. It's trending bearish, and then it started making some bullish movement up in during New York session. I trade New York session, and that's what was happening then. So this is live. This isn't on replay. So the candlesticks are still going, but I just wanted to kind of point out this trade. This is a higher time frame supply zone. Last one was demand. This one is supply. So there's a supply zone that I identified over here. I drew it up, and price was still down here when I drew this supply zone. I just like drawing my zones, and then throughout the session, you can kind of go through your pairs and see which ones are hitting your zones that you drew, which ones aren't, and then you can see how they react, possibly get a trade. That's how I like to do it. So price comes right up to the supply zone and immediately rejects. Again, this is the 1 hour time frame. You could probably find entries on lower time frames as well, but I had in mind that this was a 1 hour supply zone. So the stop loss would have been a little bit bigger, but you could have gotten in a break of candle and it would have been much shorter. So you could have gone right here and had your stop loss right here at about 27 pips, and then you could have, whatever your TP was going to be, but for me, I was going to put it just below this 200 moving average. Also, you could say that this, let's see, the software's in the way, so it's not going to let me draw a box, but say we're going to draw a line right here, marking this a resistance and turn support like it did here. It kind of bounced off this, bouncing off this high over here. That's where I would have put my TP. So really, this was like a 1-to-1 risk to reward on the higher time frames. But if you went down lower, you probably could have got like a better entry, say maybe a 10 pip stop loss, maybe 15 pip stop loss for 25 to 30 pips, which is pretty good risk to reward. But this is a high probability setup that I would have been even comfortable with taking a 1-to-1 on this. And again, the only reason I did not take this trade was because I was in the USD CAD trade, that buy with the demand setup. So I don't like being in two different trades on two different pairs at once. I've tried it before, and sometimes you just get burned. And it would have made sense because it was USD CAD for the buy, meaning USD is stronger, and then GU for the sell, which means that GBP is weaker than USD, meaning USD is stronger. So they really both correlated with each other, but I don't like correlating pairs like that together. Sometimes it works out, a lot of times it doesn't. So those are just two a supply setup and a demand setup that I saw. Two different time frames. One is a 5-minute time frame scalp. This one took much longer to play out, 3 or 4 hours, but would have hit TP if I would have gotten in. But again, I don't sweat not getting in these type of trades because I got my profits for the day and I'm out, so I'm chilling either way. But I hope you guys were able to understand what I was trying to get across to you guys. Trading can be really simple, and for me, this strategy has gotten simple where it's just rinse and repeat every single day. And honestly, it gets kind of boring sometimes. But that's the nature of trading. So I hope you guys are having a good trading week. I didn't trade on Monday. For those of you in the U.S., a U.S. holiday, Memorial Day. So I did not trade on Monday. I was chilling, relaxing, getting ready for the week. And then today, Tuesday, I did trade. That USD CAD trade was the only trade I took. I saw a few others as well that I wanted to take. Let's see. I could probably, let me go. This is 5 hour. If I go to the 5-minute, was it on USD CAD or was it, maybe it was a CAD setup. It was actually this supply. So this is the same trade that I just went over beforehand. and instead I saw this supply zone right here. So like say we're to move this box over to right here, this would be a supply zone, and then this would have gone with the trend in the downward, the sell, the downtrend, because we're trading below the 200 moving average. The supply zone's right at the 200, which I really like, and it tapped in, immediately rejected. I would have got in right here at the break of candle, had your stop loss here, probably about 5 pips, and then I would have taken it for 1 to 2, 1 to 3. That would have been another good trade. But again, that trade happened like literally right before I got on my laptop, so I didn't take it. Unfortunately, I just wasn't there in time. But I was patient enough, and I didn't have I wasn't stuck on my own bias that it was going to be sells, because a lot of times, if you think about it, and if you have been in this market long enough, you'll know that from each trading session, like say, why am I blanking on this? I just said it. Not New York session, but a London session. So London session that happens before New York session, like it was trending downward all of London. And then New York session, it starts reversing. Or if it's trading upward all London, a lot of times in New York, you'll see it start reversing back to a downtrend. A lot of you guys know this that are more experienced, but just for those that aren't. So that's why I'm not stuck to the bias just on looking for sells. Like I could have drawn this supply zone up right after that last one and been looking to take it, but as you can see, price didn't even react there. It just blew through it, and then so that's why I switched this demand zone, because we're making bullish structure. Boom, you switch it, you react to the market. You can predict all you want, but at the end of the day, once the candles get to your setup or your place in price that you're looking to possibly make a trade, then it's really reacting to how the candlesticks are forming. Or if you're a pattern trader, whatever pattern you're looking for forming. But again, probably made that longer than it should have been, but just 2 trades that I wanted to go over, but had a nice 1 to 2 RR, and then left some runners on this one for 1 to 3 this morning on USD CAD. Hope you guys have a good trading week, and let me know if you guys want any specific videos. I know someone suggested in my comments making a video of my trading plan, and I can do that. Let me know if you guys would want to see something like that, a trading plan type of video, what I focus on every single day, and the rules that I have while trading. So appreciate it. See you on the next one.